U.S. stocks have rebounded from their worst day since the financial crisis as hopes of stimulus from governments and central banks lifted the mood among traders. The S&P 500 was 3.2% higher shortly after the bell rang on Wall Street. The Dow Jones was up 3.2% and the Nasdaq was 3.6% higher. Read more. Coronavirus, FTSE 100 rises after Black Monday. Stocks sell-off. Rising U.S. stocks marked the return of a semblance of calm to markets after one of the worst days in recent memory. When Wall Street opened yesterday, the falls were so big they triggered an automatic cutout system. The S&P 500 finished 7.6% lower. European stocks have also recovered some ground they lost yesterday. The UK's FTSE 100 was 2.2% higher by the early afternoon. Germany's DAX was up 1.6%, and France's CAC 40 was 1.6% higher. Traders are betting that central banks around the world will slash interest rates to support their economies. According to futures prices, investors think the U.S. Federal Reserve will again cut interest rates by 50 basis points, 0.5 percentage points, when it meets on the 18th of March, following an emergency cut of the same amount last week. The Fed's target rate range is now 1 to 1.25%. Pressure rises on U.S. Federal Reserve. U.S. President Donald Trump said yesterday that he would meet with Republican lawmakers today to discuss a stimulus package. Today, he added to the pressure on the Fed, berating them once again for not cutting interest rates further. Our pathetic, slow-moving Federal Reserve, headed by Jay Powell, who raised rates too fast and lowered too late, should get our Fed rate down to the levels of our competitor nations, Trump tweeted. Our pathetic, slow-moving Federal Reserve, headed by Jay Powell, who raised rates too fast and lowered too late, should get our Fed rate down to the levels of our competitor nations. They now have as much as a 2-point advantage, with even bigger currency help. Also, stimulate, Donald J. Trump, at Real Donald Trump, March 10, 2020. UBS analysts in a note that more action from central banks is highly likely. We expect further cuts in policy rates and an expansion of central bank balance sheets across major economies including the US, UK, Eurozone and Japan in the coming days in response to the coronavirus growth shock and risks of contagion from the falling oil price, they said. The Brent crude oil price cratered on Sunday night and Monday morning, falling as much as 30% after Saudi Arabia launched a price war against Russia. The dramatic move came after the two sides failed to agree on a production deal at an OPEC meeting. Brent crude has risen 8.4% today, however, to stand at $37.2. Leila Kona, market strategist at BNY Mellon Investment Management, said, "Today's improved overall market sentiment has so far led to minor recovery in oil prices." Read more, Glow. For more on this story, visit the news article link.